Smart money moves in life transitions with Diamond and Suzanne. Let's dive in. 80% of women will go through at least one major financial transition in their lifetime, from divorce to caregiving to career shifts. Yet most say they feel unprepared when it happens. That's why Suzanne and I are here today to talk about the financial and emotional hurdles women face during life transitions and the practical steps that you can take to feel more confident. I'm Diamond. I'm a chartered financial consultant. I am a certified financial educator, and I am the founder of Wealth Sprouts and Co. This is where I help individuals, families, and small business owners simplify money management and navigate financial transitions with confidence. This helps improve their financial well-being. And here I have Suzanne with me. She's going to introduce herself.
Hi there. I'm Suzanne Reitz. I'm an accredited financial counselor and the founder of Financial Organizing Solutions. I help busy single moms cut through money chaos and create stability. I use a direct yet supportive approach, and I empower my clients to replace their money stress with clarity and confidence, because when you organize your finances, you empower your life. So let's get started with the first topic. Divorce. It isn't just a legal or an emotional change, it's a financial reset. Suddenly, you're responsible for managing money solo, and it can feel overwhelming.
Yes. So divorce is a huge transition or hurdle to start at. Um, One of the questions here is, what is the hardest financial shifts that women face or underestimate in divorce? So Suzanne, give me a little information on how you take on that.
Well, dealing with the emotional overwhelm, women obviously aren't weaker, but societal expectations, internalized norms, and financial hurdles like pay gaps and caregiving roles mean the shame loads are much heavier on women's shoulders. And shame isn't just a feeling, it changes behavior. It can limit asking for help, delay financial planning, and trap women into silence. Like, here's some real life examples. Having the two household challenges, we're paying for kids' clothes, school costs, having to keep track of who paid for what regarding the children, includes areas like school field trip fees and extracurricular activities. And sometimes having to purchase two sets of clothes for two separate households, especially when the other parent doesn't send the clothes back from their home, like jackets or shoes or backpacks. So
Yeah, that's a great take on that. From my perspective, one of the biggest financial shifts that women underestimate is the difference between the shared income and the solo income. Basically what Suzanne just said. So when you go from two incomes or even one income supporting two to managing a loan, these numbers don't really stretch the same way. So it's not just about splitting bills, it's about realizing that some lifestyle pieces may not fit into that budget anymore. So I would say here another thing that's really overlooked is the debt too. So if there are joint cards or car loans or even mortgage, the responsibility doesn't just go away once you get divorced. So that's a big piece to take a look at. And I'll go ahead and hand it back over to Suzanne.
well, I think that creating action steps are huge in order to help work through the finances and the changes, and creating a transition budget for items that are must pay expenses. Um, that's key. I always call it a bare bone budget. Just making sure that you can get through with certain expenses. And I think, Diamond, you wanted to talk about a resource that you have.
So what I really want to talk about here, so Suzanne touched on the transition budget. On my website, which is wealthsprouts.org, you'll be able to see a lot of different professionals that can assist you and different tools that you'll be able to use as well. So when you get a chance, guys, go and look on wellsprouts.org under our Money Map Resource Hub to find additional resources and tools that you can use. Just to piggyback off what Suzanne was saying in regards to the action steps and things of that nature, I would also add in with the transition budget. This isn't a forever budget. It's kind of like what it is. Like we're transitioning from one phase to another to use this kind of temporarily during this time frame. So really take a look at things, your must pay expenses, your housing, your utilities, your groceries, insurance, to get a very clear, or maybe just give you a little clarity on the minimum things that's needed to keep that stability flowing while you're engaging in this transition. So I really just want to encourage women to start tracking that cash flow if you haven't been already, even if it has to be loosely. So whether you're on an app, using a spreadsheet or a piece of paper and pen, when you see the numbers clearly, this helps that fear kind of shrink a bit more. So again, I'll pass it back to Suzanne.
Oh, I agree wholeheartedly that having clarity in your finances is huge. Another topic that we want to discuss is widowhood and rebuilding confidence. And a sobering statistic is that 70% of women will become widows in their lifetime, although it doesn't seem like that's the case, but it's true. Um, Becoming a widow means having emotional weight and grief, and that can equal financial hesitation. So it's important to remember close friends, trusted family, and grief groups can help bolster the self-confidence to handle your finances while grieving the loss of your loved one. And additionally, friends and family, they may need to be relied on to help financially while you wait for the beneficiary payouts to be received. Those can sometimes take months. So I recommend first step, start small, review a bank statement, allow space to pause, rebuild your skills and knowledge surrounding your finances, and utilize a professional to help you understand what's crucial to focus on first. Like someone like Diamond or myself, we can help walk you through it. And I know that Diamond has some points about this topic as well.
Yeah, so widowhood can be a very unique time frame for someone. And what I would like to say is when it comes to this, as Suzanne has stated, building a community that supports you is very essential. So your support systems are critical here. Leaning on your trusted friends, families, or like us, your financial mentors to really help you. An action step that I would say is to make sure you identify at least one accountability or support partner this week. Again, like a friend, a family member, or a professional. That way, they can check in with you, or you can check in with them about your money questions or your big financial decisions. And throwing it back to the Money Map Resource Hub, you can always look at that to explore different networks of professionals as well. So I think those are very big things that you can do, or small things that lead to those big happenings. Outside of that is finding and locating critical documents, wills, insurance policies, beneficiary designations are key. So maybe having something like a financial snapshot sheet is what I'm going to call it. So maybe create one page that lists these bank accounts, your retirement accounts, your insurance policies, your monthly bills, and your contacts, such as your attorneys, your CPAs, and your insurance agents. It sounds like a lot, but having that one financial snapshot can help you in this transition as well, because it's going to give you a clear understanding or starting point where you can reduce some of this overwhelm. And I think that's, like I said, that's a key starting point. So again, I'm going to hand it back over to Suzanne, okay?
So we want to talk about the key financial documents that should be prioritized. And although this is not technically a financial document, a death certificate is huge to have. You're going to need that for proof of all changes to your financial status. And it's not, depending on the circumstances, it's not uncommon for it to be delayed, which means that would result in the postponement of beneficiary payouts. And actually, I had a friend that became a widow at a young age, and she said that that was the time that she needed to rely on her family and friends for money. She couldn't pay for anything because she was waiting for all of the financial documents in order to proceed with the payouts.
Mhm.
And I think, Diamond, you have some other documents that should be prioritized.
Yeah, so besides the death certificate, kind of like the ones I stated as well. So making sure we prioritize and include things like your bank and investment statements. If there are any monies or policies that need to be paid out, such as your insurance policies and your beneficiaries, your estate planning documents, all those are going to be key when you're in this transition of widowhood.
Agreed. All right, so let's discuss career breaks and caregiving. So, the US Department of Labor estimates unpaid caregiving knocks a mother's lifetime earnings by 15%. And ultimately what that does is it directly shrinks your retirement income.
Mhm.
The total employment related costs over a lifetime could be over $300,000. So this means caregivers who start at a young age end up maybe with a 40 to 90% deficit in retirement savings by age of 65. This also means having to work an additional 7 to 21 years to make up the gap. Many take on debt, stop saving, or lose promotions. Without the cash reserves, credit impact is as extreme as retirement. As
Yeah.
caregivers, they frequently have to they go into debt. They have to take on additional debt because they've exhausted emergency savings or they stop saving altogether. So, what kind of, wow, lost my thought. That happens. What can women do to stay connected during a break of while they're doing their caregiving? And it's important to keep a foot in the financial door. Like make
Mhm.
sure that you're co-managing the household budget or manage it entirely. Stay involved in the tax preparation, even if your partner is the one that's doing the filing. And then
Mhm.
always track your credit score. And you
Yes.
can do that by getting your credit report from annualcreditreport.com. That's free. And actually, since COVID, you can get your your credit report every week. And it's free. Don't ever pay to get your credit score or your credit report.
Yes.
And I will turn it over to you, Diamond.
Yes. So one thing I really want to touch on here is how do unpaid caregiving years impact retirement and credit? Suzanne did touch on it a good bit. So in my perspective, I would say is when you're stepping away from work for caregiving, um, which I know has been said, it definitely reduces your contributions and may impact your Social Security or other benefits later. But one of the biggest things I want to touch on is seeing if you're eligible for a spousal IRA account or individual retirement account. Some people call it IRA. So that can be a key component in this particular area when you're doing your caregiving. So even if you're not earning, you may be eligible for this spousal IRA if your partner has income. So maintaining at least one active credit account definitely ensures your credit history remains healthy. And I would say an action step that you can take here is to open up or maintain that one credit card or a small loan in your name to pay off on time or each month. This is very small. It depends on your own unique situation. This may not be needed for everyone. It's just a tip or an action step, as I stated. But even small things like consistent contributions to that spousal IRA or your personal savings account does help protect you all in the long term financially. It gives you a bit more financial stability as well. And I would say there are a few hidden costs that are overlooked during this time when you're transitioning into caregiving or while you're in this caregiving phase. So many women I see kind of forget about these insurance gaps. So of course there's the health insurance, your disability, your life, and then there's other things that may get away from us, such as fees, bank charges, and spending slightly different during this phase. So just making sure that we keep up with these costs so they don't erode your savings without notice. So another action step here is to conduct a 90-day expense audit. So in this audit, you can print out or download recent bank and credit card statements. You can highlight your accruing charges, your subscriptions, your memberships, your automatic payments. If you need to, you can cancel some things. If you have the ability, I would say, to cancel or reduce some of these non-essential costs during this time. And then I would also say, once again, just to check the insurance coverage gaps, just to adjust anything if need be. So these are small or very simple practice steps that gives you clarity and control without overcomplicating your finances, I would say. And then again, as I stated a few times, if you need to, you can always check out my Money Map Resource Hub on Sprout. So I'm going to send it back over to Suzanne so that we can go on to our next topic.
All right, let's talk about those silent costs and habits. So things like subscriptions, overdraft fees, convenience spending, those can quietly cost thousands yearly. Bank overdraft and late fees can add up to 300 to 500 a year. And those high interest loans, that can double and triple the amount you're paying over the lifetime of the loan. So I'm saying empowering habits you can start today is do a daily money check-in of your bank balances and categorization of yesterday's spending. And that can be just a 5-minute thing. And another key thing, pause your purchases, wait 24 hours to determine if it is a want or a need. And try not to justify those wants into a need. And after some time, you'll get used to it and you'll truly say, okay, fine, that is a want. And I'll send it over to you, Diamond.
Yeah, so yeah, I agree that those small leaks, they make a big difference. Action stuff you guys can take is like performing like a subscription audit. So, canceling unused items, consolidating services, and negotiating these bills. I love the empowering habits that Suzanne touched on. So, additionally, in this subscription audit, you can kind of really make sure you're tracking these spending habits visually to see those leaks or spot those leaks. And then lastly, I would say maybe having what's called a bucket system. Again, this is an action step that you all can take. So this bucket system can be for different types of accounts, your essentials, your flex, your savings. You can name them whatever fits best for your financial, your lifestyle financially, I would say. So having these different bucket systems really can visually help you. Automating savings to transfer really helps to remove that friction as well, and just making sure that you track your progress at least weekly to kind of reinforce that habit. And then for me, I always like to say that mindset is very important as well. Just like Suzanne just empowered you. So having a mindset for plugging these leaks, so being aware is the first step to do this and pair it with small wins. So um, even if you did something like, just labeled your essentials, you took a day or 30 minutes or so to do those things, that is a small win. That is progress. You're organizing things, you're getting your financial house in order. So I think that's very important. So each week, select one habit to improve, whether it's checking your subscriptions, automating a payment, or reviewing spending, and then reflecting on this win, whether it's journaling or
Mhm.
talking about it with your partner. I think that is very key to getting these small leaks in order, but also making sure that you have a healthy mindset as well. Because taking on things financially or organizing your finances can feel overwhelming sometimes. So again, I'm going to hand it back over to Suzanne so we can go on to uh, finalize our topic here.
Well, I think that it's also really important to reiterate that small wins build confidence, and paying one bill, setting up a savings transfer, and or calling the utility company will help tremendously. And when your confidence grows, the hidden leaks stop costing you. So
Mhm.
I will hand it over to you, Diamond, to give us some practical tips.
Yeah, so guys, just to kind of sum up some things and give you some final action steps that you can take here. The first thing we talked about it briefly is creating a transition budget. So focus on your must-pay expenses, your housing, your food, your insurance, your childcare expenses before tackling on anything extra. The second thing I would say here is to separate joint finances. So list out all your joint accounts including loans, and begin the process of closing, refinancing, or shifting them into individual names. And we did talk about this one as well. So the third thing is the bucket system. Open or label accounts for essentials, flex spendings, and future me. I think that's really important to have a future me savings to keep decisions simple during these emotional times. And then the small wins, we talked about that. So small wins definitely build confidence. So this is like the fourth action step I would definitely want you to remember and include is picking one task this week. Track those expenses, try to track them for 7 days a week to set up a
Mhm.
savings transfer. We talked about this calling utility companies, calling any billing company so that you can make sure that you have a good payment plan set into place, one that you're aware of. And then lastly is to lean on support or professionals. So connect with a friend, accountability partner, or a trusted professional, whether it's a CPA, attorney, or financial educator, someone like Suzanne or myself, we can really help you here. And then lastly, you can look at my Money Map Resource Hub for additional professionals as well if you don't have those in your network, so that you can have that directory and the tools to help you find the right support that you need. And
So,
Suzanne is going, mhm.
yeah, I was just going to say that if this conversation has helped you, we invite you to join us for episode 2, where we'll continue sharing smart money moves for women navigating change. And we'd love to hear from you. Let us
Yeah.
know what's one small financial win you can create for yourself this week.
Yes, so guys, comment that below or share your thoughts with us so that we can see what you're working on this week. I think that would be awesome to hear from you. If you want to connect with myself, you can reach me on LinkedIn or you can find me at my website, www.wealthsprouts.org. Also, that Money Map Resource Hub that I mentioned can also be found on wealthsprouts.org as well. And then any other social medias, you probably can just look at Wolf Sprouts. It's with an S at the end. Wolf Sprouts Co. On Facebook, Instagram, LinkedIn. You'll be able to see our company pages as well to connect and follow with us.
And you can find me on LinkedIn, or you can go to my website, which is organizedfinances.com. I'm also on Instagram and on Facebook. So reach out to us. And we really do appreciate you being here and listening. And we hope that you were able to learn at least one thing today.
Yes, I agree. I really hope you all learned something from this segment today, and we'll be looking forward to providing you with more information and tools as well. So thank you all.